My name is Olaoulwa Baikie. I'm a chartered accountant and I have a background in economics. So, I studied economics at university up to master's level.
Firstly, you're a dear friend of mine. And I was saying to myself before we even started, this was like we just need to, there's conversation that you have, and there's knowledge that you have that I feel will be great for people within the entertainment industry, the average person doing a 9 to 5, to do economics, finance, bonds, stocks, shares, this whole, this exit that we've had to deal with. So you founded a website, or how would you call it, a website? That's
in the process. So I'm in the process of starting a business called Economic Street. Now that is essentially an economic and financial platform based predominantly on just educating people on matters pertaining to economics and finance in a very practical and relatable way, so that they can really understand the ramifications of some of the things that they see in the news, or how political issues such as Brexit can have an impact personally on their finances and ultimately their standard of living.
Okay, so for people to understand that you are actually qualified in this field,
sure.
You went to Kent University to study economics.
That's right.
And then from there you went to, I forgot the uni.
You're funny. I went to Cambridge.
You went to Cambridge?
Yeah.
There you go. You went to Cambridge, you did a master's in
Yep.
economics.
That's right.
And still a young guy, under 30, you are a chartered accountant.
Yep.
So just to basically let people know that you're legitimate in what you're speaking
about
through the due process.
Thank you. I hope I am.
So I'm going to throw a few things your way.
Sure.
Before we actually go into the current plight as let's go through a few things that most people will look at. What are the best investments that you think you should be going into now, and why?
Okay. Gold. So that's either physical gold or mining companies that mine gold. Either that or cash, because it's better than losing your money just to hold on to cash. And 3, bonds. So bonds are not going to give you a great return at the moment just because of where, I can go into detail later on, but they're not going to give you a great yield, but at least you're protected from...
Yield. What do you mean by yield?
So yield is return. So yield is essentially, put in layman's terms, is pretty much interest that you will earn on bonds. So bonds are money that you borrow to someone, i.e. the government or companies. So you can either have government bonds like the UK called gilts, or company bonds called corporate bonds. So those usually pay an interest, a coupon. However, you have to buy the bond in the first place. So it's essentially paying to then get money back with the interest. Because of the risk, all the economic uncertainty and financial instability, the price of buying those bonds has gone up, meaning the yield, the real return, so what you will get back, has gone down. Yeah, because there's an inverse relationship between the price of these bonds and the yield or return. So I'll call it return, just to make it easier to understand.
And what do you look at in terms of, what are your views on ISAs in general, the pros and cons, and the best deals that people can get with ISA accounts?
Pros and cons. It's a great way to just start saving and investing, to get into that habit and that discipline of thinking about the future and not just living in the present. They have great tax benefits. So
It's up to a certain amount.
Up to a certain amount. So currently you've got a tax an ISA allowance of £15,240 a tax year. That means if you save up to this amount, the government will not touch it. They won't tax you on it. So you won't incur capital gains tax or income tax on them. So that's one of the pros. Some of the downsides is, depending on the companies you go through to open an ISA and the type of ISA you open. So there's different types. So there's a cash ISA or stocks and shares ISAs. Cash ISA is essentially invested in cash. which will pay you minimal interest. So that's not great because interest rates are quite low at the moment. Well, they are not at an all-time low, so you're not going to get much. But stocks and shares ISAs can be quite risky, so the value of your investments could go up as well as down, and particularly in this kind of climate, they tend to go down more than up. They can also be restrictive in terms of if you're more of a savvy investor or you know what you're doing, it can be restrictive in the sense that the products can limit the scope of what you might want to do because they tend to come in packages. So it's, what can I compare it to? I don't know. Imagine going into a car showroom and buying a car. You know, if you want to get exactly all the kind of things you're looking for, you're going to have to custom build it and add specs to it. These products don't allow you to add these specs. So if you're looking for something else, you might have to just DIY it yourself, go through a provider that allows you to really construct it yourself. So yeah.
Houses as well. Do you view houses or as an investment? A lot of people think about buying a house as that's an investment.
Yeah.
You know, it's great. But if you go to Europe, you'll see, like, especially in Germany or even in France, their beliefs on actually home ownership is different to the UK. So what's your views on people buying homes as a form of investment or equity?
That's a difficult question because of what you've just said. So it just comes back to culture and geographical location. Personally, I do think it's a great investment, but that's if you do it right and smart. You could also lose money on it because negative equity. So if you've just bought a house and house prices start falling, you're going to be in a bit of a situation which you might need to ride out for a longer time. But it can be great because if you're doing it just to invest, so you do up a house and you sell it on, that's a great way. Or if you're doing buy-to-let, so rental properties, it's a way of getting an extra income that you can use for other things. So maybe sending a child to university, buying other properties, as long as that mortgage payment is covered by the rent. So I do think as long as you know when to buy, you know the kind of places to buy, and your expectations of where the market is going, then it can be a great investment. But obviously that view is different if you're going to other countries. Like you said, in Europe, some places, it's a very different culture. So you may not get that, it may not be as attractive as it may not be an attractive investment as it would be in the UK.